wanted to talk next about the biggest hurdles of home ownership. And I have John Edmead from FBC Home Loans. And when we talk about home ownership, we're talking about first-time home buyers, the hurdles that they have to kind of come over. And, a study came out, and I saw, and it looks like, the Wall Street Journal, produced this article this last week. And it basically broke down the things that prevent people from buying a home. And it was home prices, down payment, credit score, interest rate, property taxes. Those were kind of the 5 hurdles. And I wanted to spend a couple minutes in case if you're a first-time home buyer or if you know someone that is, there's no better step for building wealth and creating a legacy for your family and owning the home. The tax benefits, the freedom, the kind of the satisfaction of life, and kind of going down that list. Credit score is one of those things where sometimes there's some misconception that people have about where the credit score needs to be. What's a good credit score need to look like today?
Our minimum required credit score for financing, conventional financing, things have gotten a lot better, Andrew, which is huge. So, we're starting to see stuff, whereas before, you needed to have a minimum 640 score. That's still present for a lot of your, government lending, USDA, FHA, BA.
Right.
Conventional financing, though, we've seen a huge surge in the flexibility just this year. And that basically is the prevalence of mortgage insurance and some flexibility that we've encountered.
And the healthiness of the people buying the loans on secondary market being willing to deal when the paper isn't perfect.
Absolutely. So we're starting to see stuff at 620 credit scores, whereas before that was like a huge, when was that around the last 5 years? Never. And it's back.
And interest rates, I think sometimes, when I hear people concerned about interest rates, it always kind of baffles me because they're so low. I mean, granted, though, there are people that look at it and say, oh, I should have done something a year or two ago because they were a quarter or a half point lower. But historically, they're still so dramatically low that really, I just can't believe that's holding people back.
Let's frame that in reality.
A
year ago, we were talking about interest rates at a 3 3/4 environment, so 3.75% for a 30-year fixed-rate mortgage. And at the beginning of this year, we saw where rates actually about a point higher than that, so right around 4.75.
Yeah, so it's not as if it's...
Well, on average, right,
Yeah.
if we've seen where the market has taken us this year, average 30-year rate, the last month or so has been right around 4 1/4, 4 3/8.
So they came back down
quite a bit.
Yep.
And we had clients that locked in just in June on a lot of transactions at a rate of 4.125 on a 30-year fixed-rate mortgage.
That's awesome.
So things are definitely not where
The perception was earlier.
Correct. Absolutely. Absolutely.
So when you talk about credit scores, which is something that holds people back, and I think a lot of times people will look at and say, oh, I've got a 610, I can't qualify. But there are so many things that a good mortgage lender like you guys at FBC can do to tell someone that could raise their score 10 or 20 points in a few months. Simple things like, hey, pay this debt down, move this debt over here, pay the car off. You don't need as much down payment. Let's put you in an FHA loan. If you've got some cash, let's pay down some of the debt. Let's get in it, because sometimes, what's interesting that we found before is some of that creativity is what can make the difference. And you're not doing anything to put someone in a home they can't afford. You're just attempting to get someone into the box that the lenders want to see. And we tell people all the time. I mean, I was talking to a home seller the other day, and I was attempting to explain to them how rigid the banks are with certain things. And today they're more rigid with the property itself than they've ever been. The roof, all these things have to kind of check off a list when the appraiser goes out to make sure the property's in good condition. And they're like, well, why does that matter if they can afford the house? Well, if they can afford the house and 2 years later they get hit with a $10,000 roof replacement, then it could go into default because they don't have the money to pay for the roof. That's why it matters. But so when you look at, the credit score, it could be as simple as, hey, look, you got 3 credit lines that are near maxed out. Call each one of those and ask them to extend your credit line to a bigger number so it looks like you're using less of your available credit. I mean, there's so many simple things that can get you over the hump if you're close on your credit score, right?
Absolutely, yeah. We've learned as lenders, over the years from the credit bureaus directly to optimize our credit scores. 70% of our credit scores are comprised of how we handle our revolving accounts. Revolving accounts are credit cards and store charge cards, Target cards, etc. The ideal ratio or the ideal percentage of the limit on your card that you want to utilize each month is 30% in order to optimize the most scores that you'll get from having credit card debt.
And I think on that same token, the other thing is late pays. Late pays hurt people, and I think sometimes what we don't think about is that you'd be surprised that if you have a late pay or you make a mistake or you miss a payment or whatever, calling that lender, calling that bank and seeing if you can. Sometimes they'll remove it, sometimes they'll take it right off. You can dispute it sometimes. So you just got to work it. You know what I mean? You got to be willing. If you want to buy a home and the numbers are tight and you're missing something, you're gonna have to put in some time. You know, to get the benefit of being a homeowner, you're gonna have to jump through a few hoops. But at the end of the day, if you work it and you put in the time, it's not like you're going to get declined if you do some of these things. You can essentially help your credit score just by making some phone calls and putting forth some effort.
Absolutely. And the biggest thing is this, folks. You know, remember that there is a tool that we all have available to us. It's free. It doesn't cost us any money, and that's annualcreditreport.com. That's not freecreditreport.com, but
Right.
annualcreditreport.com.
Which is a completely free report that you can get
You can
once
get
a year.
Once a year.
Yeah.
It's not going to tell you your credit score, but it will let you know what your credit history looks like. So if there's something on there that's incorrect, that's erroneous, if you've got a blemish on your report, you have the ability to, before you find the house that you fall in love with, that you have to have, that you want to buy, and then find that something's blocking you from a credit perspective, take the due diligence, get on annualcreditreport.com, pull your credit, take a look at it. If everything's great, perfect. Call us next.
Yeah.
If there's something else that's on there, call us anyway. We'll
And
tell
we'll
you
help
what
you work
steps you
through
need to do to get yourself on that.
So a couple of the other hurdles, home prices. Again, I think this is a hurdle now because prices are rising. People that have been sitting on the fence, waiting on, thinking about it, now's the time. Don't wait anymore. Like, literally, you don't have a lot of time left to wait because the market has turned the corner. Prices are rising. You're in an environment, and again, we say prices are rising. That's not every neighborhood. There's still neighborhoods and areas of Tampa Bay out there where prices are dropping or where there's a saturation of inventory. You can't make a general statement about real estate and have it apply to everything. In general, our prices are rising, but there's areas where they're not. So if you're a home buyer and you're thinking about it, the home prices, they're not going to get better anymore. We're past that, The down payment side of it, and we got just about a half minute before the break, but the down payment side of it, we can kind of cover that when we come back. But that's something where if you don't have the down payment, there are ways to get it. You can borrow it, you can ask for help, you can save it. I mean, that's, when I say borrow it, I don't mean from a bank. I mean, a family member can give you money, a parent, a sibling. You can get the down payment from a lot of different places, and that's something that holds people back that I think they're unaware of. They got to document it. I mean, you can't just get it from a bookie. You gotta have a letter from mom or dad. I mean, you gotta have a history of showing.
Yeah, when we come back from the break, we'll talk about a couple ways that folks can gather the down payment funds and close the gap on that issue.
Awesome. So we're going to be back after a quick break here, continuing our conversation with John Edmead from FBC Home Loans. We're talking about the real estate market. We'll answer your questions live after a quick break here on the Duncan Duo Show.